Hi, everyone. Thank you for joining us today. This is an LTSE webinar. We're excited to be interviewing one of our customers for LTSE Equity. His name is Jeremy Almond, and he is the co-founder and CEO of PayStand. My name is Tiho Bajic. I am the CEO of LTSE Software. LTSE Software is in a family of companies comprising the long-term stock exchange, LTSE. We were founded by Eric Lees of the Lean Startup. And so over the last 7 years, we've been on this journey. We've been working with a number of founders at various stages of running a company. And for those founders who are joining today, we also have a product called LTSE Equity, which is how Jeremy and I got to know each other. LTSE Equity is an equity management platform that enables easy cap table creation and management, transparent ownership tracking, 409 evaluation, scenario modeling, and more to prepare you for multiple stages of your startup journey. Jeremy, as I said, is the co-founder and CEO of PayStand. If you're not familiar, PayStand is on a mission to create a more open financial system, starting with B2B payments. They're using blockchain and cloud technology, and they pioneered something called payments as a service to digitize and automate the entire cash lifecycle. In addition to running PayStand, Jeremy is also an investor, multi-time founder, and we're going to talk here about different stages of the journey that Jeremy and PayStand have gone on, and then we're going to talk about at the end about giving back and what's next. So thank you, Jeremy, for taking the time, and welcome.
Tiho, man, it's nice to be here. Welcome to everybody. Excited to share with kind of the entrepreneur journey and what's happening in financial services, which I think we're both super passionate about. So glad to be here.
Exactly, especially with the craziness over the last 4 months.
Oh, everything's normal. No big deal.
That's right. Everything's worked out. And as Jeremy and I talk, I have several topics to discuss with Jeremy. We're going to take this for about 35-40 minutes, and then we're going to reserve a bit of time for Q&A from anybody in the audience. You can use your chat and just post your questions there as Jeremy's talking, and then I'll be monitoring that and asking along the way or save some questions towards the end. So Jeremy, let's take you back to the beginning in the early days. If you can just talk about, as the founder or as a co-founder of PayStand, the inspiration behind the startup.
Yeah. So let's see. Building companies is hard, man. And yeah, as you described, we are the largest, fastest growing blockchain-enabled B2B payment network. We create radically better economics for companies, and it's a really important mission. But I got to be honest, like, to build a company takes time, energy, and effort, and it's a significant undergoing. And I think you often wonder, like, why are you going to spend the next decade or 2 decades in your career doing it? And I personally believe to do something of that magnitude, you need to have this place where your professional experience and your personal calling, your mission in life kind of intersect. And for me, it was kind of 2 things. The quick version is my background is in enterprise technology. First decade plus in my career was with some startups that went from very small to public companies. And what I experienced was the problem our customer experiences, which is, most businesses, their entire DNA of their company is on the internet, on the cloud. So their financial systems in the cloud with an Oracle NetSuite, their customers are in the cloud with a Salesforce, their stocks in the cloud with an LTSE. Ironically, though, money, which is the lifeblood of the company, that is actually like super, super old school. So in the US, most payments on the commercial B2B side are actually still done through paper checks. It's like $18 trillion. It's absolutely wild, which is slow, inefficient, and makes absolutely no sense in a digital economy. And then 2, the payments that are generally done through something that's like an old school banking infrastructure. So think wires, ACH, and in some cases cards, all of which are quite both slow, inefficient, and then it's quite expensive because they have fees associated to it. And so that just seemed really crazy to me in a world where money is just software. And so there's a problem to solve, and me, who was in enterprise software for a long time, seemed like it was an obvious problem to solve. All that said, if that was just it, I actually wouldn't have started the company. Somebody else would have met a cool B2B payment company.
Yeah.
I think, like LTSE, mission driven is really, really important, because it's actually what drives you in the morning to get up and go do, this hard thing. And so for me, my own story was, my family was part of this kind of American dream family. My mother came from Mexico, immigrated when I was young. My father was a blue collar construction worker, never went to high school, never went to college, but they worked their whole life to do the American dream, which is to buy their first home and see their kid do a little bit better. Anyways, it's a long story I'll make really short, which is they, after 20 years of working, bought a home. But then in 2008, right, like over a decade ago, a dozen years ago, they were one of the many millions of Americans who lost that home in the middle of the financial crisis in 2008 to no fault of their own. And I just remember being super pissed off and frustrated with the banks. And I was like many people, there was a whole movement called Occupy Wall Street, who just thought the financial system, which is critical to our economy, critical to jobs, critical to our savings, had let us down. And so I started this rabbit hole experience of how could banking do better? How could financial services do better? And how could we open up and transform that industry? And so about a dozen years ago, I found this thing called the blockchain, which is transformative technology. I believe, will ultimately change how we do money, how we do finance. And so that really was the meeting of the mission for me. And now, today in 2023, we're seeing how critical our financial system is when 3 of the 5 largest banks just failed in the last month. And so my belief is, building a great B2B payment company that can create radically better economics for customers and companies, while at the same time being part of a larger mission, which is to transform financial services in general, is a noble calling that has real impact today.
Yeah, thank you for sharing that. And just like 2008, early 2023, we're also at this critical juncture where we're seeing some of the fragility in the ecosystem. And I think this is also a call to, potential founders and existing founders in this ecosystem to really, take this as an inspiration, as something needs to be built. And thank you for sharing the personal part of the story as well. And just like you share that now, you've been pretty transparent in general through your journey. And you were talking a lot about how you were building and going about building in the early days. Maybe just for other founders who are listening to this, how do you feel that transparency benefited you and PayStand?
Yeah, I think 2 things. First, just as a value, we believe in openness. Financial services actually hasn't been very open. That's part of the problem. It's got fundamental gatekeepers. And so we just believe that both in our product, both in our approach, and then how we, message to both external stakeholders, customers and investors, and then internal stakeholders, employees, we think it's really important that we become an open company. And so we do that from the technology, we do that from how we share the message, we try to demystify things. And then even from our employees, we want to make sure they're activated as owners, because if you feel activated, you actually feel part of both the change agent and as a mission. And so we're really transparent about everything from, stocks to, how the company's performance is, to kind of what our goals are. It's kind of open across the board. I guess the second thing I would say, though, is one of the things we were open with for founders, building companies today is I think it's really important to make the main thing the main thing. And so I think what I would just say is differentiation really, really matters in the early days. When you go back to when we started the company almost a decade ago, we had a pretty simple product. It was basically like a comparison on B2B payments. It was a Venmo-like product, but you basically had 2 options. You either paid over the Bitcoin blockchain for free instant payments, or you got paid through a credit card, which cost money and was a little bit slower. It was pretty clunky, especially for big companies, but it focused on the main thing, which is if you produced something that was different, in this case, money that could move very fast, very efficiently, and at no cost, that would be actually better than the existing system. And so that simple, clunky product, but with something really clear, which is money should actually move at the speed of light with no fees. We wanted to validate that. And that's that validation and that mission behind trying to change how that works was true in 2014 as it is in 2023.
And so you talk about, moving no fees, speed of light, B2B payments, and you're talking about building a company in a very transparent way because you felt that openness, that transparency was missing in the industry. And so you basically are saying, we're going to take this as a core value, and I and the company are going to practice it. And so therefore we're going to be transparent. We're going to be talking about our journey.
Exactly.
Perfect. So that's a great example of, really thinking through what matters for you to differentiate as a business and how you practice that value as a company, as a founder. Thank you for sharing that. That's really great. So we're going to talk, a bit about history of PayStand, and then we're going to, take it over the years and then maybe bring it to current times, what's happening right now, as well as maybe, look ahead to the future as well. So we got a couple of questions there. So if you fast forward in PayStand's history, you guys were named the fastest growing private company by Silicon Valley Journal 2 years in a row in 2021 and 2022. And we just talked about the mission, and you talked about, how mission oriented you were, practicing your early values. How have you been able to stay true to your mission while also growing that quickly? And, have the values changed, tested, gotten evolved?
Yeah. Look, one thing I think that's easy is to kind of glorify mission-driven companies, right? Mm-hmm. And there's kind of this trite thing in Silicon Valley, like everybody is trying to change the world in a missional way. So first, does your mission actually have real impact where you actually, if you dented the world in that way, it would move the world, make the world better? We actually think financial services is a noble calling, and actually, decentralizing, that's important. That said, we're not a nonprofit, right? And so, I think what's key is, I think capitalism businesses actually have noble callings, because if you build a company that creates massive stakeholder value for your customers, in our case, we put millions of dollars back on the bottom line of the customer so that they can do their business more efficiently and hire more people and ultimately grow the economy. That's a pretty noble calling. And then that creates a feedback loop back for investors and employees and that sort of thing. And at the center of that is you have to build a real business, right? And so we think about building a real company where results actually matter. Right. And the analogy I use with our employees a lot is NASA can have this massive calling to kind of enable our ability to be multiplanetary and go to other places, but you actually have to get there, and you have to have ways to measure it. And so at a company, that means measuring, how successful you are at growing, how efficient that is, ultimately how profitable it is. And so we've been very focused on results driven, not drink the Kool-Aid, not be venture funded to just, all hype cycle, but build a real business that creates real value. And when you do that, that creates a feedback loop, because that enables more of the mission. And in our case, because the mission is about decentralizing the financial system, the blockchain, there's been so much freaking hype in the blockchain where we just said, you need a real company that actually created real value. No more hype. Just build a real great business, right? In Amazon's case,
it happens to use blockchain, but it's not called blockchain payments.
Exactly, and I kind of think about it this way, right? I got my start in tech. I was 16 in the early internet days, commercialization, and I remember the internet was all about hey, e-commerce is going to be a thing. Everybody's going to be on the internet in the late 90s. But you actually needed an Amazon to build a better bookstore. It had to be better than Barnes and Noble, and once it was, then they could power the commerce of the internet. They could prove e-commerce was a real thing. Now AWS, literally all commerce is on it. But you first just had to build a better bookstore that was better, cheaper, more efficient than walking into Barnes and Noble. You need that. So I think that's really critical. Building stakeholder value is really critical. Building a real business is critical. That can then feedback loop into the mission.
Terrific. Thank you. Thank you for helping us connect the mission to the business results, to kind of the feedback loop like that. One thing you've said about PayStand, or PayStand have said, is that you believe that the future of finance is open, equitable, and accessible. And what was the process of instilling that into the first version of your product? And how has that stayed or been challenged, staying a North Star for your product as you've continued to grow?
Yeah, I think when you create values like that, the question is, how do they have tangible results that you can measure? And so in our case, the net result of financial services not being open and equitable is it's expensive, it's got gatekeepers, it's inefficient. So the negative side of that is if payments today are mostly on the B2B side, commercial paper checks. The question is why? And the answer is mostly because where would they go to? And in consumer, they mostly go to credit cards. But credit card payments are quite expensive. So they cost about 3% to be able to get paid. And now 3% to get paid, like when I go buy my cup of coffee, that's maybe fair. It's like $5, 3%, 15 cents, whatever. But when it's like two big companies paying each other that they worked with for like decades, like $100,000 invoice, you're not going to pay 3% or 2% or 1% to a bank or a credit card cartel. And so it's really like a non-starter. And the reason why it's expensive is because two companies, Visa and MasterCard, control the entire financial network in the global economy. And then behind that, it's a system of a handful of systemic banks. And so what that means is just super expensive. So our view was to make it more open and equitable, actually a tangible value, which is it was better, cheaper, and more efficient to companies if money was treated like software. And so the way we measured that was we said, we're going to create what we call a journey to zero, which is take them, the customer, on a journey where it's zero time, zero touch, and zero fees to move ones and zeros back and forth between those two big companies. And when you do that, we actually measure it in something we call the ROI, which is we can actually measure their cost actually will get more efficient the more they use our network versus a Visa or a MasterCard or a Wire or whatever. And that ultimately puts millions of dollars back on the table. So that measurement of that ROI is actually how we make the reality of our mission around openness and fairness and equitable for companies true, because they can say, oh, I saved $1 million in bank fees and credit card fees, and I got all this time back, and I got all this efficiency back. And that's real value in a market like this where cash is the lifeblood of the business and cash is king. So
especially these days.
Yeah.
Right. And so, okay, so that is the North Star, this path to zero for companies. Takes zero time, takes zero fees, takes zero overhead, zero human involvement to transfer money between businesses. Great. Bringing maybe more to something especially that would be topical these days, because we're seeing now reports that, fundraising year over year is maybe 1/5, 1/4 in terms of capital deployed. It was, year prior. We're seeing a big slowdown. You like us have raised the Series C financing. You did that 2 years ago, so probably when it was still things were up and to the right, at least nominally speaking. And so, talk to us about moving from that early stage, fundraising to growth stage fundraising, and this talk about path to zero, open, equitable, accessible finance. How much of that do you emphasize or you tweak? Speaking of like mission alignment. And does that change between the investors who are, backing you, at least in your case, backing you early on versus folks who are really interested in your Series C?
Yeah, let's see. So I guess maybe for context, so the company's raised about $100 million to date. We just, at this point, we are probably the largest on-chain B2B payment company. We have $5 billion in payment volume. We'll probably double that again this year. 500,000 businesses use the product. So that's been a fun journey, right? And capital allocators, VCs have been, an incredible part of that journey. What I'd say is a couple of things. One, maybe because I've been through the 2001 the 2001 bubble and then 2008 financial crisis. Like the last 2 years were actually kind of weird for me because it was raise money at all costs, growth. But if you want to build a sustainable business that ultimately like changes an industry, you're thinking in terms of decades, not like optimizing for valuation for the next 3 months. And I think there was a real danger and risk over the last 2 years. And I'm not just saying that now, I was kind of highly concerned about it for years. And so what I think about venture capitalists is amazing enablement partners. You need to think about that in terms of how do you accelerate your growth of your business, ultimately in revenue. And then how do you build a sustainable business behind it? Because as you do that, they're accelerants and no more than that. The concern is so much of VC world and so many entrepreneurs, like it was a little bit of a Ponzi scheme. Like it was just raise money, no plan after that, and then we're just going to flip the company. And like that's not great company building to me. And so I'd say what's really important is build a sustainable, durable business that creates real value. Use venture capital to accelerate that if it makes sense in your business. And then the important part you were getting at the end, Tiho, is align with investors that are aligned with the long-term outcome, which in our case, we believe to build a category-defining, durable, independent company, and have that conversation straight on, right? And so we think about it's the best board I've ever worked with. I've worked with some very bad boards before. And a great board can be completely enabling, and a bad board can be completely destructive. And the way to solve for that is, as the CEO, it's entirely in your control. Choose the investors that you actually believe align with where the company is going. And so in our case, the first investor in PayPal was our first investor. One of the first investors in Venmo Braintree was one of our investors. One of the first investors in Coupa, which is huge enterprise company, isn't one of our investors. So we're aligned about what the industry needed. We're aligned with what our outcome was, which was to build a category-defining independent company, and we knew that's going to take years, not months. And so that enables you to actually focus on the right things for the business instead of all these vanity metrics, which, I think that's the good part of us returning to normal over the last, year is back to real building, real company creation, and real results, which I actually think is really good for the industry. It's good for entrepreneurs. It's good for VCs. You just have to know that's actually the right relationship. So.
Yeah. And when you're building something that is a systemic change, things take time, right? You said years, not months.
Yeah.
And so you mentioned also kind of being aligned with your investors in the long run. You said long term. If this is not a secret, what do you and your board think that long term is for PayStand? Like, what is the horizon upon which you think you need to be able to operate in order to deliver what you're planning to do?
Yeah, I mean, we think in decades, and not every company does, but we certainly do. And I'll just kind of speak to the entrepreneurs and the CEOs, and really anybody in tech as an executive. Look, it's a magic thing what we get to do. It really is. Like, I mean, I probably should have been working in the fields based on like kind of where I grew up versus like getting to do what we get to do, which is literally imagine the world as it could be, not as it is. And why that's important is you only have so many swings, right? And so make those swings valuable, because the 2, 3, 4 companies you might work at as an executive, or the 1, 2, 3 companies you might build as an entrepreneur, that is your set of swings. Make them meaningful. And so when I think about that, I do start thinking about in decades, because what you work on matters. And so at least in my world, in financial services, checks which is the dominant form in the commercial payments today, were built in the Middle Ages. So that clearly took time to transition. ACH wires and credit cards were built in between the 50s and the 70s. So that's taken, a half a century. So for us to sort of transform and believe blockchain can be this enabling agent is going to take time. But the best things, the most meaningful things do. And that creates the most, I think, joy as a leader, because I don't care about money, power, or fame, but I do care about impact a lot.
All right. Thank you. Thank you for being that transparent with us and how you think about it. So we'll talk a bit about future as well. So you kind of talk about this like multi-decade time horizon. And, as a reminder, yes, you are a co-founder, CEO, but you're also an investor, right? You are involved in startups from multiple seats around that table, from that cap table position. And so as an investor and an entrepreneur and a beneficiary, because you run your own business as well, what are some of the trends in the fintech space that you are especially excited about?
Yeah. I mean, there's so much going on. I mean, this is like
maybe just a couple. Yeah. I mean, this is a whole separate webinar, just that.
Yeah. No. But there's a lot of fun stuff, and where there's both challenges, there's clearly opportunities. First, I would say markets. Right now, markets are, everybody's wondering what's going to go on in the markets. With the level of volume we have, we get a lucky window at PayStand into how the B2B fintech market looks in general. So at our kind of size and scale, you can see the leading indicators of where the economy is going. And what I would say from our data is the B2B commercial side is actually more resilient than you might think, which is good. The data coming out of last quarter for us was growth was still quite healthy, especially in non-tech sectors. So what I'd call the real economy. So think manufacturing, supply chain, logistics, kind of real building happening. That actually is continuing to grow quite resiliently. We saw something like 14% growth year over year in the organic customer base, their revenue volume, so think $5-10 billion in volume with they're getting paid. So that actually shows pretty good traction. Tech is obviously a bit more depressed or down, but a lot of what I'd call the real economy is actually up, which is really, really good. So one, there are real companies, real creation happening, real building happening in the rest of the economy. So that creates resilience in the market. And then there's some shoots of kind of green grass in tech, especially at the earlier stage. So that's what we'd see in the data. So that's one. B2B is actually more resilient, even though we are going through, some financial crisis crunch. The market's got some resiliency too. Two, I'd say what we also see in the data is a rebalancing of globalization. So what we see, because we work with enterprise companies that have kind of customers all over the world, is over the last 2 years, there was a rebalancing of the supply chain where, you had a lot of supply chain over in Asia, and you had kind of a lot of dependencies across the systems. That created cost efficiency, but it was actually quite a fragile value chain. What we're seeing now is a rebalancing where there's more localization happening in the supply chain. That's particularly interesting around continents, especially. So where we see the most data is around US rebalancing towards the Americas, because you just have faster access. We recently, about 6-9 months ago, we bought a company, Yedu, which is a supplier payment AP portal down in Latin America. We're seeing actually a lot more cross-border kind of volume between US and LATAM. That's an area of growth that's happening. Europe, kind of interdependencies happening more. So you're having more regionalization in the supply chain. That creates opportunities in certain places. And so I think that's another big trend to look at, is that rebalancing of the value chain. And then the final one, which I'm particularly bullish on, is with all the change, in financial services right now, 3 of the 5 largest bank failures ever in history happened in the last 4 weeks. People are really thinking about the financial system and its fragility. And so I think that, blockchain's been around for about 10 years now, but you're starting to get real companies at real scale. And the way I think about that is blockchain is effectively kind of like cloud was, let's call it a dozen years ago, where the internet became a thing. Businesses started going, oh, I might need to engage in some way. How? And cloud became this enabling agent for better, cheaper, more efficient software that businesses could create. Blockchain is kind of like that in financial services. I think it eats the world of financial services. DeFi will eat some form of financial services and some form of enterprise software in general. It's enabling infrastructure. And so there's a bunch of companies that are both getting to scale right now. And then I also see in other places like in LATAM and Africa and Asia, the actual blockchain infrastructure being used on the consumer side at rapid pace. So there's like 100 million wallets in places like El Salvador, in Nigeria, in Southeast Asia. And you can't ignore that, because that's like the growth of the internet going on. So that's super, super interesting in financial services as well. So.
And thank you for sharing that. And you talked about fragility of the banking sector. There's a question that is also talking about that. Before we go there, at the same time, you talked about these three trends, that you would potentially look at as an investor, or something you're excited about. At the same time, we're seeing this contraction, slow down in the amount of VC capital being deployed, at least right now at the moment. We have these opportunities, and then how do you fund these opportunities? That's a bit depressed right now. So, if you look at the opportunities and the access to capital within these two things, what do you think? What kind of fintech companies will actually come out on top out of this situation right now?
Yeah, there's a capital mismatch. So, I think there's, on one side, people say there's more dry powder sitting on the table in VC than there's ever been. There's more, fund creation and capital allocation to venture in the last 2 years than in history. But it's a little bit of a misnomer because, that's uncalled capital. So that capital is sitting on the sidelines. And the reality is a lot of that capital is kind of waiting to be deployed. So it will get deployed, but it'll get deployed at a slower pace and it'll get repriced. So that's the practical side. The reality is good companies are always going to be in style. And so I think about that and I think, well, where are healthy, durable companies in the middle of economic sort of re-rating? I think there's a credit crunch. So I'd say that the companies that are more at risk are, companies that are doing some form of lending. Those are quite challenging in these markets. And so that and some sides of consumer, because I think there will be some level of consumer pullback. It hasn't happened yet, but it's kind of in process. Those are much more difficult to fund in markets like this. Companies that are on the B2B side, that are infrastructure companies, the reality is the secular trends are still quite significant. Coming out of COVID, the notion of digital transformation is pretty significant. Cost efficiency becomes more important in markets like this because you start caring about cash really matters, your balance sheet really matters. These things never go out of style. And so where fintech companies can create tangible ROI will actually matter. And there's a lot of things around the CFO stack that can get innovated. It's everything from LTSE to a PayStand to a lot of other really interesting companies. Those companies will continue to get funded. Certainly at the early stage, that market is still much more resilient because the reality is company building does take a decade. So when a smart early stage investor is investing now, whether it's me as an angel or an early stage fund, they know they're talking about returns 10 years from now. And the reality is those investments are actually quite good countercyclical. And you have durable entrepreneurs who are actually scrappy as opposed to kind of like an entitlement culture. So those are actually quite good. The late stage is a little more difficult. Certainly late stage compression has been 75 or 80%. Where I'd say the opportunity there is real companies that actually can grow into the valuations and are building, durable companies, in some cases profitable companies like, PayStand's building. Those companies can continue to grow and actually where I think is consolidation. So in PayStand's case, we raised our Series C, 20 months ago or something, but we literally didn't touch a dime of it because we built a real business. And so that gives us and other companies like us opportunities in these markets to consolidate. And ultimately, the best companies will actually come out on top and do become the category winners. And so I think you have a little bit of both. The early stage, long-term opportunity, late stage, still opportunity, but those are the companies where the strongest will survive and Darwinism wins. But that's good for the market too. So in both cases, I'm actually quite excited and think it's quite healthy. So.
Okay, good. So you're seeing a bunch of this as an opportunity and a bit of a reset, as you called it. All right, great. So one of the questions that we have is, touching upon this bank sector fragility, and it's really a question about your advice to founders. What is your advice around Treasury strategy, especially when it comes to a mix of traditional banks, I guess cash, right, and decentralized finance?
Yeah. Look, I know a lot of people at these banks, many good people there. But the last few weeks have been wild. I was intimately involved with, the kind of first bank failure with SVB, not in PayStand's case. PayStand didn't actually kind of use them for operating purposes. But, because we have customer volume, we had a lot of customers who actually, had deposits there. And I think a couple of things. One, this does bring into focus. Treasury actually does matter. I was quite surprised first. If you have $50 million sitting just in a bank deposit somewhere doing nothing, that's probably not a good idea. So kind of the idea of Treasury and what do you do with your cash actually becomes important. So as a startup, you do actually need to think about it. Two, what I would say is we came really quickly with products and services to hopefully help a little bit. We enabled very quickly after kind of the banking crisis, the ability to route between multiple banks, so your deposits could actually, do smart routing, so you'd have FDIC insurance across multiple banking partners. I think that's good for technology, right? You don't rely on one technology partner as a startup. You probably want to think about
more resilience, yeah.
Exactly. And then three, DeFi does actually matter. And so, we had customers who couldn't actually move their money to an SVB or First Republic or whatever. And they were able to keep operating because the network was decentralized and they were able to take their money in and pay it out. And so I think that's a really important use case. And then this might seem kind of radical, but I've actually been open about this and public about it. We're one of the companies, and there's a few public companies like this too, where we actually store a portion of our assets in digital assets. So we have Bitcoin and Ethereum on the balance sheet. And I'll give you an anecdotal story, not a PayStand, but a company that I am an investor in was down in Mexico. They had banked with one of the banks up here. Their account got frozen and they couldn't make payroll, even though the account became unfroze when the receivership happened. But they still couldn't send the wires out for payroll the next week because of kind of the infrastructure delay. And so literally me and some other people just moved balance sheet Bitcoin to that company to be able to get their payroll to be paid immediately. So they converted it back, they paid payroll out immediately. Like that's actually store of value is a real use case, not just for people now, which happen in emerging markets, but actually for companies to think about. And so, these are, I think, good new decentralized products that make the system less, anti-fragile, so to speak. So.
Yeah. So I think right now there's a whole bunch of new, treasury for businesses, startups being founded out of all of this, including to your point, holding non-fiat currencies. We see another question. How do you see AI transforming the fintech industry in the next 5-10 years?
Yeah, if we were talking about the VCs shut down, capital shut down, there's probably like one area where everyone's going, wow, there's a ray of light, right? And so, my friends on the venture capital side, I think it's the only thing they're talking about for the most part.
That or climate tech right now, if you're a larger fund.
Yeah, exactly. So, and yeah, like anything, there's going to be hype cycles, right? But anybody who's played with ChatGPT or kind of the derivatives of large language models, it is at a tipping point. This is quite compelling. I think some of the areas that are very interesting in financial services right now is what is the insight that happens out of it. So some of the auto bots that are being created, sort of auto GPT and other derivatives, are able to look at the insight that you have with almost like a data scientist available in ways that I think for a lot of companies that's hard to do. And so what I would say in general is SaaS software, I believe for the last few years, actually totally commoditized. Like 2 kids at Stanford can build like generally SaaS software now. So what's interesting is where's their moats and insight around data, because that actually is unique and valuable. And then what large language models can do is actually give really, really unique business insight. And so I think in financial services, I'm quite excited about that, because whether it's payment volume or what your general ledger or your balance sheet looks like, or receivables or payables, there's like so much rich data that today, most companies, don't have a Google team of data scientists to kind of go tell them about their business and tell them about the trends and tell them about the economy and tell them about the market. And that's going to be at our fingertips real soon. It's kind of already there at the beta level in some cases. So.
Yeah, I agree. Yeah. Well, thank you, Jeremy, for taking the time today. And thank you for being, so transparent with your, earlier stage thinking, with your own motivations, the culture of the company, how you, have a mission-driven North Star in the product and what you develop for the customers, and some of this advice for the founders and kind of like looking ahead in terms of as an investor where you think the opportunities are. And so looking ahead, I know you also as a repeat entrepreneur, as an investor, you also, take an active part in the community in terms of sharing knowledge, giving back, supporting other founders. And so maybe if you can, tell us at the end here, how you're looking to do that and how people can get in touch with you or follow you along the journey.
Yeah, awesome. Well, hey, just thanks for having me, Tiho. It's been awesome to kind of cover it. I'm a big fan, obviously, of what you guys are doing. I actually do fundamentally believe, long-term stock holding is actually critical. It's another critical component of commercial finance. Sort of making short-term decisions is never good in business building. So your guys' mission is actually, I think, quite powerful and quite important. So we love what you guys are doing. And I think we are part of a rising tide, right? A PayStand or LTSE of hopefully transforming how financial services is done. And so I think if any of this resonates for you as a listener, one, PayStand, if you're looking for B2B payments, certainly go to us, paystand.com. It's easy to find. Two, in terms of giving back, I'm a big fan of helping unearth some of this what I would call hard to read information in financial services, and particularly around kind of blockchain and democratization and opening up use cases. So I applaud what you're doing, Tiho. And so we've got a podcast we just started with me and a venture capitalist, my friend Megan Guy. It's kind of nothing to do with PayStand. It's just all about the opportunity in blockchain and decentralized finance for entrepreneurs, for VCs, for business folks. What's the real change agent that's happening there? So it's called Redefined Podcast. You can find it on YouTube or Spotify. You can find me on Twitter at Jeremy Almond, and we're sharing our journey because we do think a rising tide will lift all boats, and we do want to actually see the economic growth of our great country and our world actually increase, because that's better value for everyone. So
great on that. And on that note, Jeremy, thank you very much for taking the time today, and enjoy the rest of Wednesday.
Awesome. Thanks, guys. Appreciate it. Cheers, everyone. Bye.